Welcome back, baby. So today we're going to talk about my day trading guide. So table of content, introduction, market hours, buy and sell, stocks I trade and what they are, reports I follow, and economic calendar, indicators I use on my chart, the difference between a cash or margin account, and my Webull chart setup. A couple links for my YouTube channel. So let's start it off. So my setup, I use a Lenovo IdeaPad, and then I use an extra monitor. So I have two monitors. It is a Dell monitor, 20 inch, and my computer is a 17 inch. Let's see. So this is just a quick summary of what it's gonna be come November. I'm gonna be live trading with $30,000 then, and I'll have a margin account. So the PDT rule is pattern day trading rule. It involves having $25,000 or more, and you could trade like all the time you want, Monday through Friday. For the meantime, we're gonna go ahead and just familiarize ourselves with my strategy. Why am I confident in trading with $30,000? And here it is. So let's go ahead, scroll down. So right here, I traded with $10,000 between October 12, 2022 and December 11, 2022. That's when I fully grasped my strategy. I had no losses, and I made $2,280 in about 2 months. So in trading days, there's 20 days in each trading month, give or take, not including holidays. In total, there's 252 days officially of trading the market. So we're going to go ahead and we're going to continue scrolling, and we're going to get into my strategy and how I was able to make $2,280 with 71 cents with $10,000. And this, at this time, I used a cash account. So we'll get more into it. But briefly, a cash account is an account that if you have $10,000 and you buy your 10,000 worth of shares and you sell 10,000, you have to wait a day for your money to settle. A margin account, if you have over the PDT rule, which is $25,000, you get to trade infinitely. But if it is under $25,000, you get 3 day trades. You can buy as many shares as you want, but as soon as you sell, it counts as a day trade. We'll go deeper in that. Let's just keep going. So first of all, we're going to start off with market hours. So pre-market, you can start trading. You could only do limit orders. We'll get into that. You can't do market buys. So pre-market is 6 a.m. to 8:30 a.m. You could still trade. Not as volatile. Okay, there's not a lot of volume in there, but you can still get some action in there if there's reports coming out. Typically, reports come out at 7:30. So there's some potential there, but you could only do limit orders in pre-market. Market hours, you could do limit orders and market orders, and that goes from 8:30 a.m. to 3 p.m. And then you still have extended market hours, which goes from 3 p.m. to 7 p.m. Excuse me. So in total, it's from 6 a.m. to 7 p.m. So now we're going to go ahead and get into the buying execution. So let's describe what is a market price. Like, what is a market buy? You buy at whatever price it is currently trading at. For example, XYZ stock is trading at $1.45, and you could place an order at $1.45. The market instantly locks it in. A limit price, you set a price. So basically, you can. So if you want to buy XYZ that is currently trading at $1.45, you can set your limit price at $1.40. So you're trying to lowball here, okay? So with the limit price, you get a little bit more wiggle room. It is not a guarantee that you're going to fill. So if you're, very patient, then you wouldn't mind waiting until the stock has like a drop, and you can lock it in at $1.40. And that's how a limit order works. So from it being instantly to perhaps, having a little bit of more wiggle room here, it really gives you an edge, whether you really want to like buy in instantly, or you have time to really like choose where you want to be. All right, so now let's go on to selling execution. So same thing. If you want to sell at market price, you're going to sell at the current price XYZ stock is trading at. It is trading at $1.65. Boom. Market sell. Boom. 165 instantly. Limit price. You want to sell XYZ is trading at currently at $1.65. And then if you want to sell it at a limit, now it's a little backwards because now you want to take profit. So now, excuse me. Gnarly. Fucking gnarly. You want to set your limit at $1.75, so now you want some profit. So in this sense, you will not be guaranteed. Now you're kind of like playing a little bit more, what can I say, offensive, you would say, compared to being defensive and, having a tight limit. But if you have the analysis and the price can hit, then by all means, do limit sales. I typically use limits. I love buying at a limit and selling at a limit. It's sweet, but it gets even sweeter because this is where it gets real good. The stop loss. I know I have a lot of stuff here written, but I'm going to briefly explain how I use my stop loss. So basically, XYZ stock has been bought at $1.40. Okay. You could set a stop loss lower than that. So for whatever reason it starts dropping, it will take you right out. And vice versa. The stock is currently at 140 and it shoots up to $1.70. Okay. So now we have a 30-cent margin. Like we have a gap, 30 cents. You could put your stop loss anywhere under this $1.70. And as soon as it drops to $1.68, you will be able to lock in that profit. That's 28 cents. That's a lot of money because we're talking about multiplication. Whatever amount of shares you have is going to be multiplied by that 0.28. So if you have 1,000 shares, 0.28 is $280 instantly. Boom. You locked in your profits. The stop loss checked you out. It looked like it was going to break 170, but you're just following that profit margin. You're no longer worrying about XYZ being 140 and going under. Now XYZ is going above 140 and you're just moving that stop loss up and up and up because the number, it keeps going up. So therefore you have control of that trade. And by far, that is one of my favorite things to do. And it's just so relieving that you're in the correct position and you're not fighting the market. You're going along the market. All right, let's keep scrolling down. So now let's go back to what stocks I trade. So I trade two stocks and they're NASDAQ ETFs inverse. So the first one is TQQQ. This guy is a mini from the NASDAQ. So it correlates. So hand in hand. NASDAQ goes up, TQQQ goes up. All right, SQQQ, total opposite. So if NASDAQ is going down, remember it's the opposite. So if NASDAQ is going down, TQQQ is going down. Right. TQQQ goes up, NASDAQ goes up. So this guy is where it comes in when the market is falling. SQQQ. Amazing stock. You don't have to short. I'll explain shorting what it is. But for now, it's all buy. Because there's restrictions depending on what account you have. Cash account, you cannot short. Margin account, you could short. It's a lot riskier though because you have to borrow shares and pay fees. So, I like to keep it simple and just buy. All right, so SQQQ does the opposite of what this one and this one does. So If these two are going up, if TQ and NASDAQ are going up, that means SQQQ is going down. All right. Now, TQQQ and NASDAQ is going down. Guess who's going up? Guess who's going up? SQQQ. Therefore, whatever presents itself that day of the market, I'm gonna go ahead and pick that side. I don't have any attachments to the market. I play for what I see. TQQ is going up, go ahead, I'll buy TQQ. SQQQ is going up, I'll buy SQQQ. Simple. So this is a brief explanation of what ETFs are, what TQQ is, what SQQQ is. Now, following along. So, here we are, which is the economic calendar. So every week of every month, there's special reports that come out. So these are going to be this week's reports. Excuse me. Depending on what reports come out on every single day of the week, depends how the market will react. So these are our best friends. So I use Finviz. I go on finviz.com. I scroll down, and here we go. It's always going to be in this part. You know, there's no economic releases today. It's Sunday. I mean, it's Monday now, May 6th. Okay, but you click on it. It gives you this page every day. You want to get familiar with what goes on every week of the month. It will give you a very good edge in your trading. Here, it is showing what's going to happen Monday, Tuesday, Wednesday, Thursday, and Friday. Some days there's no reports. Some days there's multiple reports. And referring to this exclamation mark, it shows how the market is impacted, the charts itself. Here we are. So we have the prior results, what it is to be expected, and what is actual. So actual comes out once the report has been dropped. These are Eastern times. So we are in Chicago, so we will subtract 1 hour from each report, and simple like that. All right, let's get back to the. But this is your best friend, the economic calendar. Chef's kiss. Mamma mia. I love it. Okay, so I'm gonna go ahead and talk about a very influential report that comes out every month. There's a couple, but this is the one I really like to watch when the market not when the market opens, but when it drops at 7:30 a.m. and the market reacts. So it's the Consumer Price Index, the CPI. It measures the monthly change in prices paid by U.S. consumers, us. This is a good website as well, the Bureau of Labor Statistics. CPI is one of the most popular measures of inflation and deflation. It really helps you plan. Like when this report comes out, it's just magnificent. So we're going to go ahead and keep scrolling. Now we're going to get into what indicators I use in my charts. Okay, so we're starting off with the MACD. What is MACD? Moving Average Convergent Divergence. It's going to be this guy right here at the bottom. It's a very good example. I really like this indicator. So let's see what it is. It is a technical indicator to help investors identify price trends. Let's keep going, and then I'm going to read all my indicators. I have 1, 2, 3, 4, 5, 6. And then I'll show you my actual chart, and we'll put it all together. So first one is going to be the MACD, this guy right here. After that, it's going to be the Relative Strength Index. RSI provides technical traders with signals about bullish and bearish price momentum. It is often plotted beneath the graph of an asset's price. An asset is usually considered overbought when the RSI is above 70 and oversold when it is below 30. And then we have the 200-day SMA, simple moving average. The 200-day SMA, which covers roughly 40 weeks of trading, is commonly used in stock trading to determine the general market trend. As long as a market price remains above the 200-day on the daily time frame, the stock is generally considered to be an overall uptrend. 50-day. 50-day simple moving average is a trend line that shows the average of 50 days of closing prices for a stock. 50-day average is considered the first line of support in an uptrend or the first line of resistance in a downtrend. Helps so much. I will show you guys. 45-day EMA, exponential moving average. So the EMA is a moving average that places a greater weight and significance on the most recent data points. So it is another good it is another good indicator to what's it called, show an uptrend and a downtrend as well. And then the VWAP, day trader's best friend, volume weighted average. It represents a view of price action throughout a single day's trading. So if you're an aggressive trader, VWAP definitely does the job. But I used to be very aggressive. I switched up my strategy, and this is the ultimate strategy. So I don't seem to go back to that other strategy. It was effective. I was trading penny stocks with like a couple $1,000s, and I would get a pretty good return. Except once you start trading with more money, you want to have less risk, and that's the ultimate goal. Scale and scale and scale. So $1,000, $2,000 is cool. You can definitely trade, no problem. But now that I'm in a bigger scale, I have to be very precise about what strategy I choose and what strategy I want to keep using. So basically, to wrap it up, I follow a 15-minute time frame. I get to use the MACD trend along with the 15-minute time frame because it zooms out and it gives me a better trend to see if it is trending upward or going downward. I'll show you guys right now. This gives me the ability to stay in a trade longer once I'm in it to maximize my profits. If it is going into a downtrend, it gives me the ability to jump to the other side, whether it is TQ or SQ. All right, so we'll get back shortly to the account and margin. What's the difference? But for now, we're going to go ahead and bring up my chart setup and explain exactly what I use and how I use it. So we're going to go ahead and start off with the MACD. MACD's right here. So we got an orange line. We got the blue line, okay? These play a good role in the momentum. These red upside down bars and green bars as well. So let's see a very good, concise, clear usage of the MACD. All right, let's see. This is SQQQ. So let's just look at what's going on here in the MACD. So we see that we have some positive, aka bullish, moving. This is a 15-minute chart as well. The candles are a lot thicker compared to the 1 minute. It's going to get a little crazy, but you got to see it for yourself. This is just one day. This is 1 minute, 1 day. A lot. Can't even see too much. You know what I'm saying? And the MACD is going crazy. Look at it. 1 minute. This is 1 minute, like 3 minutes maybe, perhaps, give or take. Look at it. You got to be very, very fast. And you might get faked out. So you're going to be a lot more frenetic. You're going to be a little bit more panicky. And I really, really steer away from that. I straight up steer away from that. I steer away from it. So we're going to go ahead and look at this 1 minute. Like, okay, so we're red. Okay, boom, converges to green. But you see how there's barely any movement in here? Like, how can you actually tell when to jump in the trade? This is where, you know, it would be complicated, but we don't complicate it. So we go ahead, 15 minutes. Oh my God, like this is like, I'm for the bus. All right, but so check it. So we got a green one, simple, and then we got a super red. Okay, so let's get right into it. So our MACD gives us a good entry. So if we look at it closely right here, it converges right here to the upside. So we can start this candle right here to be confirmed. This is 15-minute candles in one candle, 15 candles in one. It gives you enough time to see where the market is going. Look, we went ahead, took a chance. So I'm going to be talking with these numbers here. The numbers I'm going to be reading are up here. So I'm going to go ahead, point at that candle. Numbers pop up right there, top left. Top left. We got, so I'll give you exactly what each letter means. So the O means open. How much did the candle start at? H is for the high of the candle. L is for the low of the candle. And C is what price the candle closed at, the final price before the new one opened. Now we go into the new one. Same thing, open, $12. The high of this candle, $12.40. Low of it, $12.30. Closed at $12.38. Boom, next candle, opened at $12.37. High, $12.47. Low, $12.35. Close. This is the final number that closed this candle, $12.47. All right. So we're going to go ahead and analyze it real quick with the MACD. We get into this right quick. All right. The low is $12.10. All right. So we go ahead. We're holding. We're watching the momentum. It looks good. It looks good. Oh, you know, we got 15 minutes to recognize it is not going upward no more. It is starting to go down. We had 15 minutes to hang out here. This is 45 minutes of holding a trade. You literally milked the capacity that this single move had. All right. Boom, you're done. Get out right here. Red. We're seeing that we're losing momentum. This right here is volume. Look at that big sells. Red is bad in any book. It means stop. You know, big flag indicator. Get out. You already, caught this little move here. Good. All right. So that's one way to see the MACD. All right. Obviously you start seeing it, it starts dropping. The next indicator, we're going to go ahead and talk about the relative strength index, RSI. So we got our numbers here. They said overbought, which means a lot of people are buying it at 70, when it's at 70, and a lot of people are selling it when it's 30s. So let's see if we can find a good example of it being overbought and being oversold. Here, let's get into this one right here. So this one is hitting, let's see. All right, it tells me right here. The numbers are going to be read from right here. So I'm at the dot, 82, overbought. Do you guys notice how when it hit the overbought, it got a little drop? A little drop. Let's see how much the drop hit us with. 64 drop. Momentum here. See, this is where it gets, do you really want to risk it or do you take your profits? Because look at this beautiful transition on the MACD with the chart. Look at that. It goes from red to green. Perfect indicator to go into a trade because you have 15 minutes. And you also have your other strategies, which is the stop loss and the limit buy and the limit sell. So you're getting all the tools you need to successfully enter and exit a trade with minimum risk or with high potential profit returns. So we go ahead, follow that bad boy. Look at it. It's beautiful. It's still green. Why sell out? Yeah, we got a little low. But remember, we have our other indicators or trend lines. This is a VWAP, day trading. Look, it bounced right off the VWAP, baby. It's still an uptrend. It's above it. All right, so the purple line is our VWAP. All right, we got our 200-day red. Look how high above the tickers are hanging around, positive. And then we got the what's it called, the 50-day. Once again, support popped above it. It's hanging above. And then we got the green one, which is the exponential moving average. Once again, above. It's an uptrend. Everything is signaling hold that position. Here we see how we have a come down, but look at the great jump. We go from here. I'm going to read these numbers again. I'm going to go right here from the actual conversion. So right here, we hopped into the green, 15 minutes to catch it. No big if you miss out on a couple cents. It's better to wait, confirm, lock it in. Then you have confidence. You don't want to be kind of like iffy. That's what kind of makes you a little, unconfident. Right here, this candle itself went from lows of $12.25 to highs of $12.39. This is just one candle, 15 minutes. So if you count 1, 2, 3, 4, 5, 6, 7, 8, that's 8 candles, 15 minutes. So every 4 candles is an hour. So you've been in this trade for 2 hours now. You could literally transition from the monitor to your phone, same indicators. You could even have your stop loss doing the work. You could be on your phone, you put your stop loss on. We're trading here. Let's read this candle. Numbers are going to be here. We read the candle. Highs of 12.77, lows of 12.56. Where did we initially buy? We bought it at the highs of 12.34 between lows of 12.16. So we're talking a whooping 40 cents from the 16 to the lows of the 12.56 to highs of 60 cents. Beautiful. Like, you're on your phone chilling, just checking it out. Oh, you see how it's losing a little momentum? Boom, stop loss takes you out. You're done. Multiply by the amount of shares you have bought this day. Excuse me. Delicious. Absolutely delicious. By the amount of difference in the cents. So let's just say 60 cents times, let's just say you have 300 shares. Let's just go 50 cents. 300 shares divided by 0.50 is $150. It's just straight chilling. And then boom, another leg up. But that's another story. We took our money. We could be done for the day. Or we can go in again. It's whatever the market presents us that day. Boom, another beautiful setup here. We start off green, bouncing. We go up. Catch this, watch. Momentum is losing. RSI is dropping as well. So a lot of people are selling. Red volume sticks. So it's indicating like, yo, we should get out. We should get out and just boom, stop loss, and you're out in the profits. We bought down here, profits. Now it's gonna drop. It's dropping. And we got out, and you can see it. You have time to get out. You have your stop loss. Okay, so this is my chart setup. I briefly explained the trend lines. Red, simple moving average, 200. Blue is the 50, simple moving average. Green is my 45-day exponential moving average, EMA. My purple is my VWAP. And then, I have my MACD and I have my relative strength index, the RSI. So this is my chart. Let's go back to the trading guide. Okay, so let's explain what it is to have a cash account and what it is to have a margin account. Okie dokie. What is a cash account? Let's get right into it. A A cash account. All transactions must be made with available cash. When buying securities, the investor must deposit cash to settle the trade or sell an existing position on the same trading day. So the cash proceeds are available to settle the buy order. All right, let's get an example. If you have $1,000 on Monday, you buy XYZ stock, $1,000 worth of it, and you sell it all $1,000 worth of stock on Monday as well. Tuesday, one business day, will be when your money is settling, and boom, back on Wednesday, your $1,000 is settled. Once again, Thursday, one business day, money has to be settled. Boom, Friday, $1,000 is settled once again, and it is ready to use again. So we were able to trade 3 times out of the week with our $1,000. You can still buy with the unsettled funds, but if you try to sell, you will get a GFV, a good faith violation. You will have 3 strikes. If you go against the 3 strikes, you could be in probation for 90 days. You cannot trade on that account no longer. So with the cash account, you can split up your $1,000 into $500, and you could use $500 every day, because every other day the $500 you use will be settled. That's one way I did it when I had a small account, and that is how I use the margin account as well. When I had my $10,000, I would use $10,000 on Monday, not trade on Tuesday because it was settling, and then on Wednesday it was settled, and I'll just continue that pattern. Now, margin account. A margin account allows an investor to borrow against the value of assets in the account to buy new positions or sell short. Investors can use margin to leverage their position and profit from both bullish and bearish moves in the market. Margin is also used to make cash withdrawals against the value of account as a short-term loan. This applies when you have over the PDT rule, pattern day trading. So it is over $25,000. But you don't need $25,000 to start learning and mastering the skill, so then you could later down the line grow the capital and trade with a bigger capital. So let's explain margin account in regular terminology. So we have $1,000 margin. We can use our $1,000 on Monday and sell on Monday. Your $1,000 will be ready to go once again. Therefore, we go ahead and buy $1,000 worth of shares on Monday again. Your money, aka 1,000, is ready again, and we sell again. That was 3 times that we used all $1,000 in 3 different trades on Monday. I will have to wait Tuesday, Wednesday, Thursday, and Friday until Monday. Once it comes again, I will have my $1,000 settled. The margin account comes with 3 trades, which means the ending of a trade, aka selling. So, excuse me. So, if you use your 3-day trades on Monday, they all come back the same day you use them all. Monday, 3 trades, Monday come back. Now, if you do a Monday buy and you sell on Tuesday, it doesn't count as a day trade. It's literally what it stands for, a day trade. So that's one way to finesse it a little and keep your 3-day trades. Now, you could split up your day trades throughout the week. You could do Monday, Tuesday, Wednesday, and then you can't trade Thursday and Friday. Now, the week starts all over. Monday, you get 1 trade back. Tuesday, you get another trade back. And Wednesday, you can keep the same schedule, or you can mix them around. And that's how you get around the PDT rule. And it's okay for now because it's just a learning. It is good to master the skill. It is more important to learn the whole skill before actually making money. Because once you get the skill down, the money will start flowing like no tomorrow. And I believe this sums up the trading guide. So we went from intro, market hours, buying and selling, stocks I trade and what they are, the reports I follow, where I see the reports, aka economic calendar, the indicators I use on my chart, the cash and margin account, and I wrapped up my chart along with the indicators I use. So thank you very much for watching. If you guys are interested in getting this guide, just message me and I'll send it right to you. Thank you.